Welcome to the Transparent FX Academy. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing exactly the previous high, which is also a previous level of support, now turned resistance. In fact, what we know is that from here, this previous rejection to the upside was created. Again, here, the market respected its zone. And after that, we had this massive move to the downside, and all that previous support was turned resistance. And the market, in fact, respected this area as resistance right here with the creation of this red candle. Now the market is testing again the exact same zone, and there's a good probability to see some bearish price action being created away from this resistance level and the potential double top being printed exactly at this zone. In fact, there is a good probability when we see historical resistance areas that new institutional selling starts at that level. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market here on the monthly is testing historical supply and resistance and drop down on the weekly time frame. Now, here on the weekly, even though the market is currently respecting this area as resistance, and we can clearly see that because in multiple occasions already the market has tested its zone and failed in breaking it to the upside. And once it even tried going all the way up here with this wick, and immediately it was rejected to the downside. So clearly the market is respecting that area as resistance, and there is a good probability that if now we move to the commitment of traders analysis, we will see institutional selling going on inside of this resistance zone. What we can also notice, however, is that there is some previous weekly resistance turned support here that the market is also respecting. We have previous weekly resistance from which both these rejections to the downside were created, which is now turned support here. So basically what we have here is a market which is kind of stuck in between these two levels. We have this support here, but at the same time, we have resistance here at the top, which is basically that resistance zone that we have just identified on the monthly time frame. So let's keep in mind that here in the weekly, the market is trapped in between these two levels, and let's drop down on the daily time frame. Now, from a daily perspective, what we can see is that here on the daily, the market is currently creating an impulse correction and impulse pattern to the downside. Now, if the market from here will drop lower, what we would have is just the natural movement which a market usually creates when it is in a range. When the market is in a range, it usually continues to test the high and low of the range. Since the last test was of the high of the range, the next logical step would be for the market to want to go and test what kind of liquidity there is at the bottom of the range, which means that there is good probability to see bearish price action being created from here, which means that here on the daily time frame, there is good probability for this daily impulse correction and impulse pattern to the downside to actually complete. What we can also notice is that there is previous daily support here from which this push to the upside was created, which is now turned resistance. We can also notice that we have an impulse and correction, as we have just said, and since we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg, which shows us how we have the 50% and 0.618 retracements lining up perfectly with this previous horizontal support turned resistance, creating confluence of resistance inside of this level. And when there is confluence of resistance, there is an increased probability of seeing institutional shorting, which at that point further increases the probabilities of a potential push lower. So let's go and see if we are actually seeing institutional shorting inside of this zone? Well, let's go and see what we have. In fact, when we move to the commitment of traders analysis and we look at the data for the euro. Well, the first thing that we have to keep in mind is that if we are looking at the data for the euro, we are actually already looking at euro USD, because all currencies on the spot are traded against the USD. And we can see here that with the last report, institutions have decreased their net positions from 125k all the way down to 114k. In fact, with the previous report, we already had 3,100 shorts added and 4,700 longs getting closed. And with the last report, we have an extra 2,600 shorts getting opened and 789 longs being closed from an institutional perspective on Euro USD, making it weaker. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So as the market is testing this historical level of structure here, which if we extend it to the left, we can see that also in the past, it was acting as important structure. In fact, we can see that it was previous resistance all across these rejections. So it is a quite important level, but even just focusing on the most recent price action, this is previous support turned resistance with the Fibonacci levels creating confluence of resistance with institutional shorting already going on. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection to the downside away from this area for the market to complete this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.